Hey everyone, welcome to another episode of Wallet Wisdom, a podcast presented by Lake Michigan Credit Union. If you're new to the podcast or have been listening for a while now, Wallet Wisdom is designed around breaking down the ins and outs of financial aspects, as well as helping bring answers to some of banking's more confusing or complex questions. I'm one of your hosts, Brett. As always, in the studio with me, the amazing co-host of mine, Lo.
Hello.
Hi.
It is another podcast time, so I'm very excited.
It is, and you know, the sun is out now.
Yes.
Here in Michigan, it's the thaw is finally happening.
Right, we had fake spring, and then winter came back,
Yes.
and now we're going to enter in, what's the next one? I don't remember.
Yeah,
We probably have one more winter
One
surge.
more winter left.
Yep.
Yeah, exactly. The encore of winter.
Encore, I like it.
Exactly. Well, we have, as always, a great episode for you guys. Joining us again, we have the very talented and very knowledgeable Jim Blakeslee. He is here with us, Vice President of our Wealth here at LMCU. Jim, welcome to the show. How are you?
I'm well. Thank you for having me back.
Absolutely. Well, we loved having you on, back in the holidays, and gave us a lot to think about in ways that we can, really use our money in the best ways to help others. And we're glad to have you back as we're in a new season. It's not the holidays so much, but it's the tax season.
Helping ourselves this time,
That's right. That's right.
Making Christmas in April.
So, yes, we are so excited to dive into that.
Well, right next to charitable giving, tax season is actually, I spent a lot of my early career doing tax-related work and trying to be the Pied Piper of pay less on your taxes to grow your wealth more. So this is I have a whole bunch of stuff we can go through, but I know we're going to be focused on what people can do for 2022. So
yeah. Well, as I've learned, every year brings a little bit of a different, twist on taxes. There's new tax policies and
brackets.
Yeah, exactly. And so it can, I think, for a lot of us, and myself included at least, it can get kind of confusing in how you keep up on all of that. And having you on the show to kind of help break down a little bit of those things, and what some of those key changes may be for 2022. I know, obviously, for listeners, you've for the majority of you have probably already done your taxes and filed them for 2021. So obviously, what we talk about today is more going to be a benefit to start implementing for this year when you do your taxes next year. So I'd love to just dive right in, Jim, and kind of hear. I think for a lot of us, we're all kind of wondering, what are some of those key changes, those tax changes for 2022, and how those might kind of affect our listeners.
Okay, well, let's frame this up first. So first of all, tax season for me begins January 1st and it ends December 31st. I know people think of it differently.
I love that.
But by the time you get to what normally people call tax season, it's as if you've had the party, you're just counting up how many bottles you drank, all right?
I love it.
It's too late, all right? So,
it's cleanup mode.
What we're really focused on here is kind of thinking through, because you mentioned how the tax law changes, but also human beings' lives change, right? Our members' lives change. And that's really where opportunity or obstacle can arise during the year. So if we can frame it so that we're going to try to change people's minds to start thinking about their tax year while it's happening as opposed to after it's over, I think we'll be able to help them reduce the amount of money they pay legally, that is, for taxes. So as far as the tax law this year, a lot of people, well, I'm going to say some had their hopes up for tax law change in 2022. Some had their hopes that it wouldn't happen. And as things played out, the major tax law provisions that were in the Build Back Better bill did not pass. However, the tax law is full of what I would call already legislated provisions that most of them relate to inflation increases, both as the tax brackets as well as to other benefits that you have in the tax law. So the tax law change this year, or in 2022, is going to change primarily in two ways. First of all, last year, because of COVID, there were some provisions specifically related to mostly child care related benefits or earned income credit benefits. And those are going away. And so if people depended on those, it's going to hurt this year. All right.
Yeah.
That's just the fact, because while those benefits are going to go up because of inflation this year, they were enhanced last year, so they're going to go down. So people who think they're going to get the same thing this year as they got last year, they will not. The law has changed.
Yeah, and I think that's important for listeners to kind of plan for, right? You know, especially knowing that more, you know, for me and our family, you know, we've got 2 kids, and that definitely was a benefit to see coming in. But, you know, to plan appropriately, because to your point, I mean, it's there and then it can be gone like it is now.
And I think so often people think of taxes as something that just happens to you. And it's something that's out of your control. But what I love is that, Jim, you are so knowledgeable and passionate about letting people know that, no, you have control over how this can turn out, right? By paying attention and knowing where you fit and how to best utilize that. So thank you for coming in and talking about that.
Well, that's a real convert. That's exactly the point, Lo. So the idea is to get people out in front. And you know, we can talk about changes in life that are going to come up against some of the things that have happened this year. But you're always supposed to get the bad news out of the way first. So in terms of 2022, the real downer is that the special provisions related to COVID last year have expired. The good news is, as mentioned about tax brackets, is that they are indexed to inflation, as are many other things, and so they're going up. So you're going to, what that basically means is when you hit a certain threshold for paying taxes and how much you're supposed to pay, the upper amount has gone up. And so just to kind of give you an idea, it's a 10% tax bracket. For a married couple, you pay 10% and you make between $0 and $20,000. The upper bracket, it's and you're married, it's $647,850 for the 37% tax bracket. So one of the big things, and maybe there should be a bell going off here, but for the listeners, it's simply that trying to manage how much money you make within those brackets, this is probably the biggest thing I'm going to say, is the most important, because there's so many things tied to the brackets themselves in terms of credits and benefits, that knowing where you stand month to month, quarter to quarter, and certainly if something really good happens to you, like you get a raise or a bonus or something that's, you know, unexpected at work, then understanding how that might impact certain tax benefits that you either want to use or did use, but may now go away because you've crossed the threshold for income. So we can talk about what some of those things are, but one of the big things is that the brackets themselves are gauged to inflation, and they've gone up this year, and so that's beneficial. It allows you not to creep through inflation into the next tax bracket.
Sure.
And that is one of the things that does happen to you. You can't, you know, change what the brackets are going to be, but like you said, you can manage your money within there. And I mean, between the brackets, it's a dollar difference, right? Like ultimately comes down to,
right.
So kind of knowing, oh, I'm about to hit the next bracket. I got to start thinking about managing that throughout the year so that I'm not smacked in the face with it when tax season comes, right?
Well,
right.
And you mentioned about bonuses. I mean, you might, you know, listeners might be planned out for what they're, you know, expecting. And then you get this, you know, wonderful, you know, bonus check from maybe your employer, which is a great happy thing. And then you're like, oh no, that's just pushed me over what I was thinking.
Yep.
And so I'm going to guess you have a few suggestions though, Jim, on what are some things you can consider, you know, helping in those ways, in ways that you can contribute to some other programs like HSAs and retirement.
Yeah, well, that's right. And so when people manage their taxes from January to December and their income, they have much greater control over the outcome. And so let's talk a little bit about a real life scenario. Somebody is a worker. I'll just use the state of Florida. They just passed a law here that everybody's going to get paid $15 an hour minimum. All right, that's going to go into effect this year, right? So if you're making $12,000 an hour, you're making $15. Well, let me just list a few of the things. If you're married to somebody and they also have income that might be impacted by your raise, right? Just it's a legislative raise. So things like traditional IRA deductibility could be impacted. Roth IRA eligibility could be impacted. The net income tax credit could be impacted. The premium tax credit, the education credit, and the child tax credit could all be impacted because they are all bracket specific. You make up to a certain amount of money and you start to hit a threshold, and after you make too much, it goes away completely. And so for people like that, here's another, maybe you gotta get a bell, maybe more cowbell here, right? But if you get a raise this year and it's unexpected, whether it's because of the legislature or because your employer decides to increase compensation, you did a good job, I would encourage people to put all that money that you can into your retirement plan.
Yeah.
For a couple of reasons. A, it's unexpected. And B, it will allow you to spend all of this year and into next year to figure out how it really impacts your taxes going forward. If you're able to stop up all of the additional compensation you receive in the form of a retirement account, I should say, thirdly, the sooner you start saving for retirement, the better off you'll be. But the better off you'll be to managing your taxes, because you'll avoid creeping up into a higher tax bracket because you're putting more money into your retirement account. And that, for most employees, that's the biggest, easiest way to eliminate a windfall type of increase in their compensation. So I would encourage people to do that first and foremost, and then figure out what they need to do. I'll give, again, another real life situation. Let's say you're a couple making pretty decent money, and you have kids in college, and you've used the education tax credit last year.
Yeah. And
this year you have two people who end up getting increases in compensation, which pushes them over that. Right, so they lose that. Well, they actually use the tax credit for reducing the cost of sending their child to school, and now it's eliminated. So it's something that we paid attention to, because these are real things that people are using or are benefiting from, and if you can keep them and keep your money because the government isn't taxing you on your retirement contributions, it's a win-win. So that would be the first thing I would say you should do, is you are benefited by an increase in compensation here. Save all of it if you can, or as much of it as you possibly can.
Yeah. And those rates did change, how much you can put. That was one of the things that changed this year, correct? Contribution limits?
Correct. In 2022, the amount you can contribute to an HSA has gone up $100. Better than a sharp stick in the eye. So it's for 401ks for people under 50, getting back to the number, they can contribute up to $20,500 a year, and that's up from $19,500 last year. And if you happen to be over 50, you can put in $27,000 instead of $26,000. So it's a double thing, because if you get more money in this year, yes, your tax bracket may rise, but if you can stop that up and put it into a retirement plan, your retirement plan is better funded. And if you're using any other of the benefits, tax credits that are also triggered by how much money you make, you actually help manage that as well, which is why I tell people that you start January 1 and you manage this thing throughout the year. And then at the end, you kind of know the score, and you can actually do a mock the tax return, let's say sometime the end of the first quarter, just when your taxes are supposed to be due for last year, is kind of look at where you think you might be next year and then manage your taxes. Again, it seems a little bit wonky, but it's how people always complain about why rich people are using the tax code a certain way. It's simply because they can, and there's no limit on that just because you have more money. I mean, the tax code is there to be a tool for all of us. And so I hope, in some way the information we're sharing today gets people to change their behavior about how they think about it. Because I can assure you that wealthy people, businesses, they are all considering the pre and after tax cost of things because it's such a substantial amount of money. It can be up to 40% of the difference between having the government help you pay for something versus you paying it all for yourself in after tax dollars. So using it well is really important.
And I think for many of us, I don't know, for listeners, I know I've felt this way a few times where you're right. You see some of this in, with the more of the wealthier, demographic, and you start thinking like, man, that just can't be legal. And how is that legal? And then it can't be. And it's like, well, it is all legal. And it's not a crime that they're doing because they're following the code. I think the truth is the real crime is the poor information that's given to everybody to be able to understand and be able to use that to their benefit. I think that's the real crime at hand, is that so many people just have not been, educated in those areas. And there's not always a lot of great information out there easily accessible. And so I think that's one reason, again, we do this show for listeners, is that they can really grow their wisdom for their wallet.
And that's kind of true because, wealth begets wealth, kind of. So if you grew up with a parent that was doing all of this already, you're more exposed to it and able to do it. And you kind of, would you say you have to act like a wealthy person to become a wealthy person?
Yeah.
I mean, I think that's you have to be an informed consumer. Unfortunately, the IRS is not the best place to go shopping. All right, so it's a difficult,
it's my favorite place to
go in the mall, if you will.
Yes.
But
if any listener works for the IRS, we still love you. But
yeah. Well, it's just the thing is, it's so daunting that people put it off. But there's so many things that people can do that are not nearly as complex as they think they are. And so it's just kind of grasping the concept that the tax code is full of these triggers, right? Their income, how much you pay on your income taxes or your capital gains, how much you can contribute to something or take advantage of. And it's all built in. And this year, that's really what's taking place. Most of the tax law change is already baked in the form of inflation adjustments. And so you end up, if you can arm people with the idea that their tax year begins January 1st, not March 31st.
That's so true.
When they're running to their accountant or their bookkeeper with all their tax information, it's really can change. I mean, I would say that most people could find literally thousands of dollars in additional benefits in the tax code by putting in an extra, let's say, couple hours in the way they think about their taxes and manage them throughout the year. And it's the risk, the rate of return on your time is very high. You can find benefits there that are just laying there. You can't do it after the fact. In most cases, it's hard to fix things that have already occurred. But if you do it in advance, it's very doable, and it's very valuable. In addition, we were talking a little bit about going on trips. And if I could find somebody an extra couple of $1,000s to go on a trip a year, tax savings,
absolutely,
that's real money, right? It's
absolutely
it's a difference in a family's quality of life, and that's really as a credit union, and with the program we have with Wallet Wisdom, it's just a great way for people to come to the credit union and find information all within their banking services relationship with us. So we've given a lot of information. We have the resources, and it's just a matter of changing their behavior. So we all need to become psychologists here, but it's well worth the time and effort.
I always tell people it's barbers, bartenders, and bank tellers are your people that you go in to get your head shrunk, right? So
I love it.
That is definitely that's probably true for most of us. But,
right.
You think because we had so many B's, you could say bookkeepers, all right?
I like it. Yep.
You should go talk to your bookkeeper.
Yep.
Because when your bookkeeper sees your books, he or she knows what's been going on. All right?
Absolutely.
There's no question about it. You've given them the keys to your financial kingdom. So, but they prefer to get them in advance and manage with you over the year than to get to the end and find out they're just basically telling you the score. Because most people feel like, hey, I got to check back. Almost the worst thing you can do is get a check back. I know it feels good and it's a type of forced savings, but what it's meant is that over the course of the year, you had less to live on because you overpaid your responsibilities to the government. And so understanding how to get to the right number is extremely beneficial. And it takes some work, but it's well worth it because I think you can literally find thousands of dollars in reduced tax liability, and you spend a little time doing it in advance.
Yeah. I love that. LMCU is in it for life, right? We have accounts starting at birth. As soon as you've got a social security number, come on in, and all the way to the moment we have to do a death claim on an account. And I love that you are really spreading the knowledge that this is for all ages, right? Yeah. Especially, I'm in my 30s. Right. Retirement is not, Social Security is not a given or promised to me.
That's true.
As we continue to move on. So I guess what I think we should really tell our listeners is, where do I go if I want to start my foot in the right direction? How do I find resources and get some help from LMCU to figure out what's next for me?
Well, we have, as you know, we have a couple different avenues. First of all, our website is full of information through the Wall of Wisdom program, and even other programs that are on the budgeting tools that are on our online banking tools. So those resources are right there and available. Obviously, we have very informed employees, and we have, as a credit union, many of the products. We have like a world-class HSA. So if somebody's looking to manage their health savings, that's a tremendous vehicle to do that with. But in addition, the credit union has a wealth management business called Max Wealth Management. And if somebody's looking for a broader investment palette, if you will, than just banking products, we can refer them over to Max Wealth Management, and they can help them with a lot of this. Obviously, you need tax professionals to do the ultimate tax work, right. But just pointing people in the right direction, getting them on track, helping them come up with a plan is key. And the credit union or its wealth management group, Max Wealth Management, could do that.
And that's...
Can I tell you one thing about HSAs before we go on? Because it's something that I think a lot of people don't think about.
Yeah.
But because we have such a great offering, I think it's worth talking about it.
For sure.
HSAs, many people use them just to pay their medical bills. It's basically pre-tax dollars, right? Money up to a limit goes into your account with your money, but pre-tax, and then it's spent with no tax if you spend it on the appropriate medical expenses.
Yeah.
Well, a lot of people, as they get towards retirement and they're still having good incomes, actually start to fund their retirement spending for medical issues out of their health savings account. So what they do is they pay all of their medical bills, their deductibles, et cetera, while they're working, and then build up an additional cash, if you will, of resources just for medical expenses, because it's one of the largest expenses in in retirement, and they use that funding for filling in a lot of the things that Medicare and other types of retiree medical plans don't do. So it's not just a plan to pay with pre-tax dollars or tax-free dollars for your medical. It's ultimately a way you can use it as a longer-term part of your overall retirement savings. And over, 5 to 10 year period, you can build up a substantial amount of extra money for medical expenses. So I think that's something everybody should know who's listening to this, is that is a resource that we do very, very well at the credit union.
I love that. And, as we retire, or as we get older, medical expenses probably will increase. That's just kind of the odds we have, right? Mm-hmm. And it's like we have home insurance, car insurance, life insurance. This is kind of what we're doing with our retirement, right? So this is my retirement health money. This is my retirement money for the fun. So I love that mindset. Yeah. Thank you.
Yeah. Well, being 30, you got some time. You'd have a big account, but as people are in their 50s, it's a great way for them to stock away money specifically for something that is likely to be used by them when they reach retirement.
Yeah, and absolutely. So for finding out more information, that's lmcu.org/maxwealth, correct?
Yeah, it's LMCU.maxwealth@lpl.com.
And that's the email address. Perfect.
Nice.
Very good.
And you can always find all those answers on our main website too, at lmcu.org. There's actually a whole section of information for listeners about Wallet Wisdom. That's called Wallet Wisdom, where you can catch up on past podcast episodes. But there's other great tools in there, as well as other articles that you can read to kind of learn more about different ways that you can continue to grow in your wisdom of your wallet. And so, lots of different ways. And as always, you can always call or stop into a branch, and everyone wants to help.
Yeah,
it's
they
awesome.
Absolutely do. And social media, too. Even if you shoot a message on social media, we will have someone connect with you and make sure that we get you taken care of.
Indeed. Well, Jim, thank you again so much. We're so glad that you were able to, be on the show again with us and share some great information. And I think, for me at least, some information for me to consider going through the rest of this year. In fact, one of the greatest things that I got from your chat was right from the beginning, when you said, tax season doesn't actually start after you file your taxes. It starts January 1st.
Happens between there.
Exactly. It starts at the beginning of the year and until the end of the year. And I love that. And I hope listeners can take that same thought. So it's a year thing. So, well, I don't want you to, jump off the call quite yet, because as always, on Wallet Wisdom, we love to have fun, and it's time for our Are You Smarter Than the Show trivia.
So that noise instantly makes my hands sweat. Why is that?
It's just like when, Who Wants to Be a Millionaire, and the lights, they all flash down, right. And it's are you ready?
Right. We're in a very well-lit room. That mood is not in here, but my hands instantly sweat.
Yeah. Well, and rightfully so, you're back in the hot seat. I unfortunately had a dismal attempt at trying to build a streak last podcast.
It was partially my fault too. I had too much faith in you.
You talked about the big game, and then I just did not. I didn't come through. But we were happy to be able to send some money to one of our nonprofits that we support. And so, Jim, today we've got $50 up for grabs for you to be able to either choose which nonprofit that we support, LMCU, or if Low wins, then we'll put it into a little pot for next show.
The show gets to keep a running tab.
That's right. So, just in case listeners are tuning in for the first time, the way the game works, we will have a race to 3 questions, and then if need be, a tiebreaker. You will buzz in with your name. That is your buzzer. So, if you need to practice that's Jim and Low.
Thank you for the reminder. Sometimes that leaves.
Yep. But if you guys are ready, I'm ready to give you the first question.
Yeah.
Let's
All
do
right.
this.
All right. Here we go.
Go ahead.
All right. What is the name of the Earth's largest ocean?
Jim,
Jim.
that's a good name.
It is a good
No,
name.
the
The world's
largest ocean. It's the Pacific Ocean.
Pacific is correct. That is correct.
Nicely done,
Little
sir.
geography going on this one.
He's in Florida. He knows more about oceans
That's
than me.
right. That's very true.
I'm on the Gulf.
He's on the Gulf.
He's on the Gulf,
A little
though.
different,
Okay.
but yeah, no.
Just a couple hours to see the other side to see.
All right. We went from geography. Now we're going to go to biology.
Oh, man, my two
I
worst
know.
subjects in school. Thanks, Brett.
All right. Which bone are babies born without? Which bone are babies born without?
I know this, but I don't remember it.
Okay.
Babies are not born
I,
with this.
I know part of what it is, but I don't. You get dinged and you say the wrong answer.
Yeah, you won't get if you say it wrong, Lo will have
It
a chance
doesn't
to
take
steal.
away your right
Yeah,
answer.
that's right. You're
All
still
right,
going to have
like
it.
Jeopardy.
Yes.
All right, so Jim.
All right.
I will say that it's the cranium.
The cranium is not the correct answer, unfortunately.
Yeah, they have those plates, but they aren't connected.
Yeah.
So
there's one
Yeah,
bone
that's
out
what
of the countless thousands, I think, in our body.
So I'm gonna go
whittling
really
it down.
just put it out there.
Okay.
The humerus.
Unfortunately, that was very funny, but not correct.
It was very humorous.
No, in fact, it is the kneecap, believe it or not.
I did know that.
That's how they're able to bend, and it's crazy. But
Yep.
no kneecap.
They needed to make them without kneecaps so we don't
It makes
break them.
sense.
That's right.
Yep.
That's right. All
There
right.
you go.
Well, we're on to the third question here. Lo's got to answer it right if she wants to tie it up. If not, then Jim, you're on your way to a victory here. So, all right. Let's make a little shift over and all right. Good question here. Power outages in the United States are mostly caused by what?
Low. Wind or storm.
Oh, it is not, unfortunately. It's not.
Interesting.
Jim, this is a freebie. You can go right for it. You're going to win regardless, but maybe you can really put some insult to injury here and get a two.
So it's not wind or storm. Right?
Correct.
Is that correct?
That's
Yeah.
correct.
So I would say it's lightning.
Ooh. Unfortunately, it's not.
Is it something dumb like squirrels or something?
Is it fires?
It's squirrels.
Jesus, that-
Squirrels are the number one reason for power outages
That was
in
my
the United
second
States.
thing, but I'm like, the only thing I've ever had it go
Oh,
out for
my
is
goodness.
storms.
Isn't that hilarious? I thought that was a good
Mischievous
one.
little buggers.
Well, Jim, congratulations. You know what? That was redemption. That's what that is. You came back.
You wiped it.
You did. You took down Lo. See how it feels in one?
I do see how it feels.
It's like-
and I didn't need to.
Oh, man. Well, Jim, congratulations. We'll get with you and we'll have you take a peek at the different nonprofits that we have on our list that you can send that money to.
Different type of contribution.
That's right. That's right. So
Excellent. All right.
awesome.
Like you said, everybody wins. The winner is the charity. So terrific.
Absolutely.
That's right. Exactly. So, well, again, thanks so much, Jim, for being on the show. And for listeners, as always, we love that you get to tune in. we love hearing from you as well. We want to continue to create content that is in what you want. It's what you need to hear more about and you got questions about. So be sure to subscribe and to follow us, on
comment and all those fun things. We want to hear from you.
That's right. Tell your friends, tell your family. We're fun.
Yeah.
We're cool.
My kids don't say I am, but I think I am.
That's true. But, what do those kids know?
Right.
But as always, we're on Facebook, Instagram, Twitter. Don't want to miss us on the Facebook. I think I said that already.
Yeah.
We're on all the
Spotify,
platforms.
Apple, all the places.
That's right. Maybe those listening, we'd love it if you're listening from even like iHeartRadio or Amazon Music. We're on all the fun ones. But as always, we'll see you next time.
Bye-bye.
Thanks for listening. The information provided in this podcast by Lake Michigan Credit Union is general education or marketing in nature and is not intended to be accounting, legal, tax, investment, financial, or other advice. Statements of individuals are their own, not LMCU's. All topics discussed are information of a general nature and do not address the circumstances of any particular individual or entity. Consult an appropriate professional concerning your specific situation. As of the date of publishing and any future date this podcast is broadcast, all rates, fees, payments, or other specific figures discussed are subject to change and are dependent upon your specific financial situation. All loan products discussed are subject to credit and collateral approval. You alone assume the sole responsibility of evaluating the merits and risks associated with the use of any information or other content in the podcast before making any decisions based on such information or other content. In exchange for listening to the podcast, you agree not to hold LMCU, its affiliates, or any third-party service providers liable for any possible claim for damages arising from any decision you make based on information or other content made available to you through the podcast. For more information on any of the content discussed in this podcast, please visit LMCU.org. Copyright Lake Michigan Credit Union, federally insured by NCUA. Equal housing lender. LMCU, NMLS ID number 442967.